Even though you're not a tax expert, the IRS still expects you as a business owner to know the topics that I'm going to talk about in today's episode. Now, usually I'm accompanied by my amazingly beautiful wife, Lola Turner, but she is off doing great things as an amazing finance executive and doing great things for our clients, as well as, still making huge strides in corporate America with the Fortune 500 companies. So today I am flying solo, but I'm going to dive into a different way of doing the F+A show today, because I think that there are some very essential tax topics that business owners need to be aware of. And you know what? I figured instead of recreating the wheel, I've done several videos on this over the past couple years. I mean, as a CPA, it's a topic that I dive into often. And although I focus more on doing consulting with small business owners, helping them really navigate the strategy side of their business, I know the tax side and I see issues that come up. So I want to go back and play a couple of clips to really help people understand, there are some things that the IRS just expects you to know. Even though you're not an expert, they still want you to know these things. And if you don't know them, you could find yourself in trouble. So the first clip I want to run with is going back to something that I talked about when I really help people understand, hey, what are the 8 types of taxes that you need to be aware of? And yes, there are 8 taxes, or you say 8 kind of categories that as a business owner, you need to be aware of. Now, you may not necessarily need to know all of them, but you need to be aware of what they are so you can have the right kind of conversations with your tax preparer. So let's jump into that clip and I will be right back. If you're gonna run a business, tax is a topic you need to have some awareness about. Now, you may not be a CPA or tax accountant, so you may not have to figure it out yourself, but you do want to be aware of tax topics. Now, we'll start off with the basics to say, okay, the way taxes work, you have taxes at the federal level, which are set by like the president, the Congress, the people in Washington, D.C. Then you also have taxes at the state level, which are set by your governor or your state politicians. And then you also can have taxes at the local and the county or the city level, which are set by government at that level, which mean like county officials, or you would say, your city officials. Now, because taxes happen on multiple levels, every level of that, I guess you'd say, hierarchy has the right to set or change tax laws based on their specific situations, which is why tax law can get very complicated. Taxes can be very different from state to state, and then sometimes taxes can be very different from county to county. So it is best for you to have some awareness of the type of taxes you need to consider, especially if you are a small business and you don't have your own internal tax department, because you need to be at least aware of, hey, what are some of the types of questions or some of the types of taxes that I need to have a conversation with my accountant about? Now, here's a list of some of the taxes that you need to be aware of. Here we go. The first one are federal income taxes. Again, taxes that happen at the federal level. And depending on the type of business that you have, whether you're a C Corp, a partnership, a S Corp, LLC, a sole proprietor, that federal tax level or tax implication may vary. Now, another level of taxes is depending on how your business is set up, you may have a corporate tax to pay. Another area are the Social Security and Medicare taxes, your federal unemployment taxes, your excise and sales taxes, your state income taxes, property taxes, and franchise taxes. Again, all of these topics can be very complicated and are very deep topics to explore, and we won't explore them all in this video. But what you can use this video for is to understand the different types of taxes that you need to have a conversation with your accountant about. So what I recommend for you to do is, hey, send your accountant an email and just list out all these taxes and list them from top to bottom and just ask your accountant, hey, based on my business and the way my business runs, hey, am I good, or which of these taxes do I have to be concerned or think about as it relates to my business? And if you're working with a good CPA or a good tax accountant or tax attorney, they should be able to, and they really should be able to, tell you, hey, these are the taxes that are related to your business, and hey, here's the strategy, or here's what we are doing to make sure that your business and your personal taxes are good to go in these areas. So there you have it. I mean, 8 taxes or categories of taxes that you need to be aware of. And I always tell people, as I said in the video, you don't have to be the expert, but you need to be aware of it, because that's one of the big things about being a business owner is you don't necessarily need to be the expert, but you do need to be aware of it. Now, there's something I touched on in that one was self-employment taxes. And I thought, after getting several questions, that I should probably dive a little bit deeper into that one. So I did a separate video just on self-employment taxes because I wanted to dive into that topic a little bit more. So let's go to that clip, and I think it'll help you start to conceptualize so you can start to put the pieces together. So let's check out that. So if you own your own business, or you're a sole proprietor, or maybe you're a partner in a partnership, well, there's something very important that you need to know about self-employment taxes. Now, the truth is, self-employment taxes is one of those complicated topics that not a lot of people understand. So we're gonna walk through it and give you a basic understanding of self-employment taxes so you don't have to be as concerned about it. Now, the first thing you may be asking, what is self-employment taxes? Now, self-employment taxes is very similar to if you have a job. It's the, I guess you say the FICA, the Social Security tax that usually you pay as an employee. Well, when you work for yourself, whether you're an independent contractor, you own your own business, or you're a partner in an organization, you're responsible for paying your own taxes, which means you have to actually either work with an accountant or figure it out yourself, is how to take the proper amount of taxes out of your expected pay. Because that's what makes it a little complicated. If you own your own business, sometimes you don't know how much you're gonna make that year. So you have to make estimations. Now, when it comes to self-employment taxes, another very, very important, I guess you say, thing to remember is, how often do you have to pay these taxes? Again, if you're an employee, every paycheck your employer is taking, I guess you say, withholding taxes from every check that you get. But when you work for yourself, it's like, okay, how frequently should these taxes be taken out, or how frequently should these taxes be paid? According to the IRS, they prefer that you make quarterly payments. And the timing of these quarterly payments is where you pay on April 15th, June 15th, September 15th, and January 15th. Now, the question then becomes, okay, how much do I pay? Well, there are a couple of ways that you can approach that to make sure that you don't end up in a tax issue with the IRS. You can pay 100% of what you paid the prior year if your tax situation and your income is gonna be about the same year over year. Because the IRS looks at that and says, hey, if you pay, the same amount of taxes that you paid last year, then hey, you know what? You're free of getting any penalties. Now, another way you can look at it is maybe you pay 90% of what your expected tax liability is going to be for the current year. Again, that's going to be based on estimation, so you probably should work with your CPA or accountant to figure that out if you want to go that route. Now, another factor that you have to think about, because you may be like, this all sounds very complicated. And trust me, as a CPA, I can say it does get a little complicated, which is why it is best for you to work with your accountant to understand, hey, how do self-employment taxes impact me? Am I paying the right amount? Because you don't want to pay too much, but at the same time, you don't want to not pay enough. Because the IRS looks at it and says, if you don't pay enough during those quarterly payments, they actually charge a penalty. And the way that they charge their penalty, it is a little complex. So let's look at an example. Let's say if your tax liability is $2,000 a quarter. So you're supposed to pay $2,000 on April 15th, June 15th, September 15th, and January 15th. But let's say in April you pay $2,000, and then come June you pay $1,500, and then in September you pay $2,000, and then in January you pay $2,500 to make up the difference. Well, when the IRS looks at that, they're gonna say, yes, you paid the right amount in total, but when they look at June, you were $500 lower than what you should have paid, and what they're gonna charge is a penalty on every day that you were $500 below what you should have paid. So you're gonna have a pretty decent penalty because they're gonna charge you by the day. Now, again, self-employment taxes can be a complicated topic. So my best advice to you is to work with your CPA or your accountant to get a better understanding of how does this self-employment tax work in my specific situation. And if you don't have a CPA or an accountant, then you probably should pick up the phone and call one and contact one today, because self-employment taxes is something that you should be concerned about. So now that you got an idea of, hey, the overall, hey, here are the 8 categories, and we went a little bit deeper on self-employment taxes, you're probably feeling a little bit more comfortable. Well, I mean, to be honest with you, you're probably going to have to go back and listen to that a couple of times to really feel comfortable with it. But that's why we break it down in the bite-sized pieces, so you can listen to it over and over again. I mean, whether you're in the gym, you're on the way, to the store, you're out doing things as a business owner, you want to make sure that you are putting the right information in, because again, the IRS holds you responsible for that, not your accountant, not your CPA. Now, the next topic I want to go to is something that I've heard a lot of people talk about, and it's a question that I get a lot. And when I get that question, the way people ask it sometimes, it makes me cringe because I know they're going to get it wrong. And I know that they're probably going to get themselves in trouble, because I'm just like, you know what? That's not it. I mean, don't do that. Like, really, take a step back. Let's rethink this. I try to talk them out of it. And you know what? Instead of just stretching it out anymore, here, I'm gonna play the clip and I'm gonna let you'll be able to hear it. When I explain it in this next clip, you'll be able to tell the thing that I say that just makes me cringe. So let's check out this next tip that is another area of the essential tax topics that you need to be aware of. Now, as a CPA, a lot of people come to me and ask, hey, Terrell, how can I lower my tax liability? And some people already have an answer. They're like, you know what? I heard that I can just start a home-based business and I can write off expenses, which will help me reduce my tax liability. And whenever I hear that, I always think, this could be a very tricky situation that you're going to get yourself into trouble if you're not mindful. Now, you may be thinking, well, if they're legitimate business expenses, then I could write it off. And I'm like, yes, if they are legitimate business expenses, you could write it off. But what you may not be aware of is the IRS actually has a rule that helps them determine whether your business is really a business or whether it's just a hobby. And if the IRS says your business is a hobby, then you lose all of the tax benefits that come with running a business. Now, the way that rule works is the IRS says if you lose money more than 3 out of 5 years, then your business is no longer considered a business for tax purposes. It is actually considered a hobby. And if it is a hobby, you don't get any of the benefits of being able to write off expenses or whatever. So if you've heard the advice of, hey, you need to lower your tax liability, so start a home-based business, I always implore people, if you are going to start a business, you need to have a very real and serious effort to actually generate a profit. If you are starting a business just for the purpose of reducing your tax liability and writing off expenses, then you probably might find yourself in trouble with the IRS if you are not aware of how the rules actually work. So, if you're taking tax advice from some stranger or some random post you saw on the internet, I would probably advise you to think twice before you actually use that advice. Or, in most cases, I always tell people, contact the accountant or your CPA, or watch the videos from the Business Talk Library, because if you follow the wrong advice when it comes to taxes, you could find yourself getting into a lot of trouble. To wrap up, the last clip that I want to go back to is a question that I got, and I thought it was a very good question. And it was a topic that I really needed to expound on, because a lot of people were kind of getting this confused when they hear about, these major companies like the Amazons, or they hear about, even when Donald Trump's taxes came out and they're like, well, this is what he's doing. I can kind of go duplicate that, or maybe I can use that tax strategy. And I'm like, whoa, wait, let's get something straight, because if you do this wrong, you could set yourself up to be in serious trouble. So make sure you understand that, although the news may be explaining the tax strategy one way, do understand there's a little bit more to it than what the news is explaining. I mean, if you think about it, the anchors on the news, they aren't tax experts. Their job is not to really explain it in a way that you can go act on it. Their job is to just explain it in enough of a way to catch your attention to watch the news. So I did this video to address something that I heard a lot of people kind of talking about with their strategy. And I was like, hey, make sure you keep this in mind, because if you go about that wrong, you could be setting yourself in trouble. So check out this last clip. So you decided to step out and you're running a business. Well, a very serious question I have to ask you. Is this a business, or is this just an expensive hobby? Now, a lot of people have their own opinions about how do you tell if this is a business versus a hobby. And you know what? You can go on and on about those definitions or those explanations or opinions. But the opinion that I really want to talk about is what the IRS has to say. Because there are situations where the IRS steps in and says, hey, you know what? This really isn't a business. This is just a hobby. And if the IRS says your business or your so-called business is a hobby, then you lose all of the tax benefits of a business. Now, so you're wondering, what is that rule? Well, the IRS says that when you are filing your taxes, you are only allowed to take a loss for 3 out of 5 years. So, which means in a 5-year period, in any given 5-year period, if you recognize a loss for more than 3 years within that 5-year period, the IRS says this is no longer considered a business for tax purposes. This is actually a hobby, and you lose the benefits of being a business from a tax perspective. So, when you think about starting a business or you think about running a business, most people never actually really plan to just lose money. But when you're running a business, sometimes you realize that, hey, the product didn't take off like it was expected to, or expenses were a little bit more than they expected. So you want to make sure that you are aware of this rule and that you're working with your CPA and your tax accountant. And now, speaking of that, There are a lot of people that I've come across. I mean, being a CPA and dealing with taxes and accounting and finance, there are a lot of people that I've come across that said, you know what, I need to find a way to reduce my tax liability. And so their cousin's brother-in-law gave them some crazy idea like, hey, you should start a home-based business. And they say, well, you know what, that sounds like a great idea. And they're like, yeah, you can write off some of your expenses and you can write off the things that you're doing in your business. And I'm like, okay, all right. If you are going to start a business, let's be very clear. If you are doing it just for the purpose of writing off expenses, then you might be in danger of running against this rule called a hobby, not a business. And when the IRS says that your business is a hobby, you lose all of the benefits that come with a business, and you could find yourself into some serious tax trouble. So before you take your cousin's brother-in-law's advice, please make sure you understand how the IRS looks at this and how the IRS determines whether this is a legitimate business or whether this is just an expensive hobby that gets no benefits of taxation as a business. So if you have questions about this, definitely talk with your accountant or your CPA who understands your specific situation, because they can help you navigate this to make sure you don't get in trouble. There you have it, 4 tips, or I guess you would say 4 clips that hit on some very essential tax topics that you need to know as a business owner. Now remember, you don't have to be the expert, but the IRS still holds you responsible as a business owner to know these things, which is why I wanted to do a recap and revisit some of these great episodes or great videos that we've done. We broke it down into bite-sized pieces to help you understand it. So definitely continue to tune in. If you like the content and the way we broke it down and the way we simplified it, here's what you can do. If you know a business owner, send this episode to them. Tell them to check this out because I don't want them to get in trouble. And what you can also do is go over to YouTube, go over to Apple, any platform that you listen to podcasts, hit that subscribe button, turn the notification bell on so you will get updates on the latest and greatest episodes to come. Again, I'm Terrell Turner, sitting in for Terrell and Lola Turner on the Finance and the Accounting Show. Until next time.